Hi everyone, welcome to today's video. So on today's video, I'm going to help you understand why smart investors are selling the Indian market and are moving to the American market and other markets. Now, this is not my opinion. Take a look at this FII selling data. You will see that from the year 2020, they have generally been net sellers in the Indian market. Why is that happening? I'll help you understand with a macro study. Very quick disclaimer, this is not an anti-national video. It's your money. You do whatever you like, whether you want to keep it in India, move it away from India, do half in India, half in US, you do. Okay. Second key point, I'm going to back up everything that I say with data. I'm going to show you actual real data. These are not made up facts. Number three, I myself am moving a lot of money out of India into the American market. I'll explain you the logic why also there. Fourth and most importantly, it's not as if that I do not trust the Indian stock market. Most of my money is in the Indian stock market, but in very specific type of stocks. I will continue to retain that holding. I'll continue to invest more in the Indian stock markets also, but in only very selective type of stocks. I'll help you understand the entire story. My simple, humble request is, please watch this video with an open mind. I'm trying to teach you something new. I'm a practicing investor. My job is not to entertain you, but to tell you money-making strategies. So on that note, without any further ado, let me quickly show you a comparative analysis of S&P 500, which is the broad index in the US with Nifty 50. So this purple/blue chart that you see, this is for Nifty 50, right? आप यहाँ से देख सकते हो. That between the year almost like 2008 से हम देख रहे हैं all the way till this point, right? Almost 2016. So 8-9 साल हो गए, 9 years. It gives almost like 77% run up. But NASDAQ, which is this Japanese candlestick pattern, ये वाला जो आप pattern देख रहे हो, this only gave 32-33% run up. So natural question comes कि यार Nifty में तो it is giving like almost 80% run up. Here S&P 500, which is the US stock market, that has given like 32% run up. So okay, so number one, this comparison is incorrect. Why? Because you have to adjust for the fall of INR. That every year INR itself falls by 4%, roughly 4.5%. So if you multiply it by how many years, so almost 9 years, 4, so 36% तो आप इसमें से ऐसे ही हटा दो, right? So 36 we remove, right? So how much is left? So roughly 44% is left. So this is a more relevant comparison. 44% Nifty returns, 32% S&P returns. This brings us to the next point कि अच्छा यार, then the Indian market is very good that it is giving like 44% and S&P 500 is giving only 32%. Well, it is supposed to, because Indian market is an emerging market, or India is an emerging economy. What is the meaning of that? That GDP of India is roughly like $3.6 trillion. Now, what is the GDP of US? Well, it is close to $28 trillion. So size of India's GDP is this much and size of US's GDP is almost like this much. Okay. So since we are growing from a smaller base, we are emerging. So we are more risky. And therefore, when someone is putting money into the Indian market, they are taking higher levels of risk. And therefore, they are supposed to make higher levels of returns. That's what is called as risk-adjusted returns. So this is not an anomaly. This is how typically it should work. But if we compare the last 5-6 years, what has happened? So again, let me show you the same data point. So here we are, take a look at this. So here you will see that Indian market in the last how many years? So 2017 से हम देख रहे हैं, Indian market and American market has given exactly almost the same return. जैसे S&P 500 का 143% हो गया, Nifty का 134-135% हो गया. But again, you have to adjust it for the fall of INR, because every year INR falls by 4-5%, right? और 4 भी मान लो, 4 भी मान लो, multiplied by since 2018 up until now, तो almost 7 years, so 28%. So अगर आप ये सब भी add कर दोगे 28%, but another like 6-7% here, so कितना हो गया? So 35% returns more US market has given, right? These are all facts. These are not made up numbers. You yourself go to this website, check it. Build that fundamental knowledge, build that fundamental understanding, and try to protect your own money. This is my simple pitch. You are investors. You are not here to defend anyone. You are here to grow your money. So please watch it with that lens. Please understand about the stock market. Problem right now is that because maybe like some of us might have 100% exposure to the Indian stocks. So पहले तो क्या होता है कि we go into a denial mode कि because Akshat is telling us something negative, anti-national इंसान है, ये है वो है, भाई मुझे क्या करना, आपने जो करना है करो, it's your money, right? I am giving you like honest information. So what you need to do at this point is that you need to ask a sensible question ki boss, next 5 years, is this purple line going to go up like this and there will be more divergence, right? With this candlestick pattern, ye aisa jayega aur aisa jayega. If this is the case, then well and good. You can be more India oriented. You can keep like maybe like 90% money in India, right? And maybe let's say 10%, 20% in the US. Okay. So this is one possibility. Second possibility is ki, boss, you know what? There is a opposite situation that this purple trend, right? This actually goes down and American market actually does better, right? Ki American market aise aise chala jaye. So in that situation, it might make a lot more sense to do like maybe 60, 70% here and maybe only 20, 30% here, right? In very specific type of stocks. So which strategy am I picking? So I am doing this, okay? Again, a very important quick disclaimer. I am not here to criticize anyone. I am an investor investing my own hard-earned taxed money, right? In the markets. Now it's secular, money is secular. My job as an investor is to grow money, right? Now, there is a reason why FIAs are selling. Here is the data. And now let me explain it to you in 7-8 points. Why sensible investors are moving to the US market. Number one reason I have already inherently helped you understand. It is the fall of INR. But in order to judge whether this scenario 1 will play out or this scenario 2 will play out, this scenario or this scenario, right? Aapko kya karna kya hai? So here you need to take a look at these two forecasts. This indicates when 1 USD will be equal to 100 INR. Okay. So is this going to happen soon? Unfortunately, yes, this is going to happen soon. What does that mean? That we are again going to have that equation where INR will at least fall by 4 to 5% per year. So in real terms, you are not making money. Retail investors in India would think, ki, boss, mujhe kya farak padta hai, right? I mean, they will just look at this purple line, right? They will just look at this. They will say, yaar, acha band ho gaya, 100% run up ho gaya, right? In the last 5-6 years, and I'm getting a CAGR of 20%. Okay, fine, but you have to compare it to the rest of the world, right? Because investors, foreign investors, if they are making more money in a way, yeah, so I hope you get the picture. I'll not belabor this point, but you need to judge this on parity basis. So anyways, just wrapping up my thought, that see, because INR will continue to fall, this gives you number one reason to move some money out of India. Which platform you can use for US stock investing? I will highly recommend Vested, right? You can go and check out the links in the description and comment box. There is a special coupon code that you can use in case you want to invest in the US market. Now, the second key reason to invest in the US market is recent Trump actions. Now, in case you have missed what has happened in the last 3-4 days, number one, Trump is pro-capitalist, or he is like extremely capitalist. He advocates low tax cuts. He's a business-oriented guy. He recently launched a coin called as Dollar Trump, which made roughly 2000% returns in a 3-hour time frame, which was absolute crazy return. But what does all these things indicate about Trump? Well, what it indicates is that he's trying to create more speculation in the US market. Now, I'll say, ye to gandi baat hoti hai speculation karna, right? We should not speculate. We are fundamental investors, all that stuff. So let me just help you understand. Please listen to this with an open mind. See, if you consider FNO, okay. Now, why does FNO activity pick up in India in the last 4-5 years? Because there was a lot of speculation. FNO is a purely speculative activity. Dream 11 has become one of the most profitable startups because people want to speculate on an activity like creating dream teams or whatever it is, right? They are gambling, and gambling is again a pure speculative activity. Now you'll say, nahi, stock market is an absolute pure thing, that it's like a religious worship place. Nahi bhai, it's gambling only at the end of the day. It says that you're gambling with knowledge. Okay. Now let me give you 1-2 examples that see, HDFC Bank is a wonderful stock. Okay. Why it is a very good stock? Because fundamentally it is very sound. It is generating a lot of revenues, profits. For example, take a look at this. You will see that profits have like double, tripled, right? At crazy rate. Has the stock price gone up? The short answer is no. Prices only go up when there is some kind of speculation happening. There is a lot of demand for that thing. Okay. So whoever can create demand, right? For example, from the year like 2019 to 2024, a lot of demand for Indian stocks was trying to be created, right? An impression was given that, you know what, India stock market bahut hi acha hai, right? And, you know, PSU stocks ye ho jayenge, wo ho jayenge, all that stuff, right? I don't need to again belabor this point. You guys understand this. Now, something similar Trump is doing, right? And him launching his own coin, right? Crypto coin is something that he has done. He's a pro crypto guy, and he is going to bring in more speculation because he understands that bringing demand for US stocks, US based cryptos, US based bonds, etc. brings in a lot of money in the US. And that is what they are trying to do, and they are succeeding. This is literally point number 2. Now, just a very quick side note, that doesn't mean that you should sell HDFC, this, that, not. No, absolutely not. See, there are very good fundamental assets in the economy, and if you're investing in Indian stocks, you should fundamentally do it. This is something that I teach on my courses also. This is something that I teach on my member community also. In case you want to learn how to identify speculative assets from fundamental assets, how to build a position, how to cut positions, etc., you need to fundamentally educate yourself. So I'll again give you a pitch that do consider doing 2 things. Number 1, please check out my member community. Try to join it for a couple of months. If you don't like it, cut your subscription, big deal. Second key point, that if you are interested in learning everything from scratch in a step-by-step manner about investing properly, then please consider joining my live course. The next batch is in March. Almost all the seats are full. There are a handful of seats left, which will get filled post this video. So in case you are someone who is investing more than 5-10 lakh rupees in the stock market, then attending this 4-day course over 2 weekends is going to be super useful for you. The reviews have been great. It has a 95% plus completion rate. You guys can go check out the testimonials, speak with ex-students. You yourself will get conviction in terms of investing. I will also be covering US stock investing on my course. So with that said, let's move to the third point, that why at this stage the US market is better than the Indian market, because there are a range of options. Right now, what is the meaning of range of options? जैसे कि मैं आपको बताता हूँ, first key thing, that see, if someone is buying dollar Trump, or if someone is buying BTC, if someone is buying US debt, and at the same time they are buying US stocks. See, what happens is that people typically get accustomed to investing in an environment. It's like an Apple ecosystem, that once you buy a MacBook Pro, you buy an iPhone also, you buy like AirPods also. Why? Because it's difficult to exit that ecosystem. In the US, the ecosystem seems to work. For example, जैसे यहाँ पे, they are bringing in a lot of speculation, right? That okay, up आओ, you become a price chaser, right? And you are growing your money or whatever. If you are able to make money, then, and if you are looking for a lower risk instrument, go to stocks. If you are looking at even lower risk instrument, go to bonds. Now in India, what is the situation? The situation is that this ecosystem has been killed, right? So यहाँ पे है ही नहीं, मज़ा ही नहीं है. And what do people typically chase? People chase very high returns. That's the nature of it. As humans, we are gamblers. Now, if you see 2-3 years of low stock market returns, what will people get excited about? जहाँ पे return आ रहा होता है कि they will speculate on this. अब उनको risk लग रही होती है तो they will go to debt, whatever, right? So this ecosystem is there in the US right now, but this ecosystem is not there in India. Now add to this something called as trading taxes. Now what is the meaning of trading taxes? And this point is specifically applicable to Indian NRIs. Now see, if you are a tax resident of, let's say, UAE, right? And if you are investing in US stocks, now what is the long-term capital gains? It is 0. Now what is the short-term capital gains? It is 0. Versus if you are an Indian NRI living in UAE, investing in Indian stocks, now what is the short-term capital gains? It is 20%. So to cut the long story short, for a lot of people, they have an option to be traders in the US market, not in the Indian market, structurally speaking. Similarly, they have an option to buy cryptos in the US market, not in the Indian market. अब आप बोलोगे ऐसा थोड़ी होता है कि इंडियन मार्केट में भी ट्रेडिंग करते हैं लोग, इंडियन मार्केट में भी क्रिप्टो खरीदते हैं. Okay, you can buy crypto in the Indian market, but is there legitimacy to buy? For example, I'll give you another example. In other countries, you can link your bank account. For example, let's say that there is XYZ bank. Okay, you can link that bank account to a crypto buying app. Now in India, can you link that bank account? Like for example, HDFC वाले आपको crypto खरीदने देंगे आराम से, right? That is the issue. It's the convenience of buying something. In India, it has been made like a thing that, what, cryptos are illegal, this, that, and we have like a sitting president of the United States launching his own meme coin. This is the reality we are living in. So stock market is a capitalist game. You have to go to a capitalist country. That is how I'm seeing it. This is especially relevant for speculative activity. Now, again, before you start bashing me, let me give you another quick commentary. Let's see, in India, the good news is that there are 2 very good things happening. Number 1 is that there are a lot of fundamentally good assets. For example, if you consider banking, okay, that's a fundamentally good asset in India, but it might not be a fundamentally good asset in the US. Why? Because Indian banking is not fully mature. Okay, now what do I mean by that? For example, in India, the average credit debit card usage is maybe like 0.25 credit card per adult. But in the US, one adult has on an average 4 credit cards. Now that is huge because the banking product penetration in India is very less and it will grow with time. That's a needed fundamental product which will grow with time. There is nothing that we should get scared of on that. So there are these type of good opportunities. Second key thing which is great in India are small and mid cap companies. Now again, please, this is not a recommendation that you go and buy small cap companies today. I'm just fundamentally making a point that, see, if you consider Russell 2000 index, so this is Russell 2000 index. Now Russell 2000 is basically US में जो small cap companies होती हैं, the top 2000 small cap companies, that is what is represented by this purple line now, right? And you can see this index is called as IWM. And here what you will notice is, let's see, if you go back, right, generally what you will notice is that this purple line usually stays below this candlestick pattern, which is S&P 500. So compared to the broad market, which is NASDAQ or S&P 500, the small caps in the US, they do not typically do well, right? But opposite is the case in India, that in India, small and mid caps typically beat Nifty 50. Why? Because India is going from an unorganized sector. So approximately 60% of our economy is unorganized and will eventually get converted into organized, or a large part of it will get converted into organized. So this is a fundamental understanding. So in India, my focus will be on picking fundamental stocks. In fact, 70% of my portfolio is financials in India. I've been saying it not now, but for the last 1.5 to 2 years. And remainder, I will focus on small, mid-cap, unlisted type of stocks. Now, many people ask that how to buy unlisted, this, that. So again, I'm putting all the links in the description and comment box. You can go and check it out in case it fits with your investment thesis. So the next key point about the US market is that the market data is very clean and it's easy to invest in the US market. Now you'll say that, okay, this is a contradictory statement. Can you give an example? Yes. See, for example, let me throw a exercise at you, right? So for example, this is the US market, right? And this candlestick pattern, what you're seeing. And if you take a look at this chart, you'll get a little bit worried. You know what, boss? This has gone up by a lot. For example, this has gone up by 100% in the last roughly 2 years. So index has gone up like crazy. Now, this is the same exercise that you can do in India, and you might be worried कि यार यार index बहुत ज़्यादा बढ़ गया है. What can you do about it? You will hear people saying कि short the market, short the market. How will you short the market? Is there an ETF which you can easily buy, which is liquid, that you can buy in India and short the market? You might buy and sell options, and that way you can take counter positions, but that is complicated. But in the US, you can use a combination of ETFs, exchange traded funds, which are very easy to buy. For example, you can buy something called as PSQ. So this PSQ is a reverse ETF. This is a reverse ETF of NASDAQ, which means what? It means that, hey, if NASDAQ, which is again a US index, that if it goes up by 15%, then the ETF or the reverse ETF of NASDAQ, which is PSQ, it will go down by 15%. Right? So in case you are sitting here wondering, you know what, I want to short the market. Then what can you do? You can basically buy PSQ. Should you buy? Should you not buy? So I'll write a detailed community member post tomorrow, and I will speak more about the US stock investing, how I am exactly building like a $1 million portfolio. This is a thesis that I will present over the next 3-4 months on my YouTube member community. So in case you are interested in learning more about international investing, and if you are a high ticket investor, I'll definitely say consider joining some of my communities. It will give you a lot of understanding. So I hope that you got the picture that, hey, for example, and let me show this to you on the chart also, जैसे आप देख सकते हो, this literally acts as a mirror image कि whenever the NASDAQ goes up, PSQ goes down, right? And again, you will see this, right? For example, so if we go here, so here you can see that the NASDAQ fell, but this purple line went up, right? So this is called as shorting the market, and it is much easier to do in the US compared to that in India. So then comes the next point, which has to do with a macro point. So for example, if we look at or identify the growth engines in the world right now, it would be artificial intelligence, robotics, semiconductor, etc. Now, if you were to identify the next set of Google, Amazons from this space, which company will you bet in India? Or will Indian players end up exporting to the world? Do you see that possibility in the next 5 to 10 years? I personally do not. Again, this is not an anti-national rant or something like this. I'm just depicting the reality. As an investor, you have to be real with you, honest with yourself more than anything else. I do not see that happening. So if I have to identify like the next Google, Amazon from these industries, artificial intelligence, genome editing, etc., where do I need to go? Most likely US or China. Now, China comes with a lot of opaqueness, but At least the data is very clean in the US, so that's a plus. So therefore, if you want to pick these type of companies, then you should definitely look at the US market. Am I doing it? 100% yes. So at this juncture, I'm looking at these type of companies there. Now, finally, the point is that if as an investor, you have access to a range of opportunities, you can always choose to invest your money in undervalued things. Now, what is the meaning of that? For example, right now, the private banks in India, one could argue, is undervalued. Just yesterday, Kotak Bank went up by 11% in a single day, right? Which was massive. Now, similarly, there are a lot of undervalued opportunities in the US. For example, there is a company called as LVMH, which is Louis Vuitton, right? I mean, it is a value play right now. AMD has fallen quite aggressively from its peak. Now, these are all stocks that you could study and possibly build positions, but you will only be able to build positions like these if you take exposure out of India. So what is the portfolio building advice I'll have for you? It's very simple. That number one, please look at the world practically, realistically. You are putting your hard-earned money. You don't have to impress anyone. Do what is logically sensible. Number two, having more investment options really helps. Number three, if you are an NRI who is based in a more tax efficient country, then automatically US stock investing becomes really lucrative for you. For example, if you're based in UAE or Singapore, then US stock investing becomes a lot lucrative because of lower taxation. And finally, you really need to understand where growth is happening. So growth is happening in certain sectors in the US. It is happening overall in the US economy also. It's not as if that India is growing at a massive alpha compared to the US economy. Unless that starts to happen, it kind of makes sense to balance your portfolio this way. Whenever we see the Indian market growing faster or possibility of it growing faster, we will reposition our portfolios. That's how I'm looking at it. I hope you enjoyed this conversation. If you did, do press the like button and I'll see you soon.